If you have not even thought about your taxes, our next guest is here to help. Financial advisor Maggie Johndrow has all we need to know this tax season. Welcome back to New York Living.
Thank you.
Listen, it's a necessary evil.
Yeah.
We got to talk about it.
Yep.
You've dressed the part. You look gorgeous.
You look very you look serious.
It's a bit serious.
No joke.
It is.
Yeah.
It's like Christmas. April 15th is tax day.
Yep.
Don't be surprised by it. It's the
Right.
same day every year.
Every year.
Pretty much. Anything new that we should know for filing on the 15th?
Sure. If you can't make the 15th, I know you were saying you're done, you're not, Ben, you can file an extension to October 15th. However, it's an extension to file, but not an extension to pay. So you might get penalized. The average penalty is about 0.5% a month. So, something to consider. It's better to probably get it in on April 15th unless you have a really good reason to file that extension.
Is it better to do earlier, to file earlier? Is that there's a benefit to that?
They do believe that you get a refund sooner, right? First come, first serve, so to speak. So if that's something you're relying on, the sooner you get in, the more likely you are to get your refund faster.
Okay, so what are some of the common mistakes people make? Besides waiting until the last minute, and specifically in the New York area.
Yeah, so a big one is considering where you live and where you work, right? The New York area is tri-state. Some people are commuting from New Jersey, from Connecticut. You will still pay taxes if you work in the city, city tax or New York tax, but you want to make sure you file for a credit. For where you live. Right. You don't want to be double taxed, so that's a big one. Another one is people like to be snowbirds, and so if you're trying to claim a state tax like Florida, where you don't owe state taxes, you have to truly be able to show that you're there 6 months and a day. So the majority of the year, they're really cracking down on that.
Oh.
I once did my taxes myself when I was a young lad.
Sure.
And it was terrifying. Like, you don't know what you're doing. Would you advise people getting, an accountant to do it or do it themselves? Like, what do you think is the best advice?
Yeah, so if an accountant or a CPA does your taxes for you, they're going to be able to represent you in an IRS audit. So that's your maximum benefit initially. Like you said, take out the fear, right? But if you have a simple tax return and you know you're taking the standard deduction, then sure, doing it yourself can make sense for you. I think a lot of folks in this area, though, have more complicated taxes, right? They might be landlords. They might own some real estate. They might have RSUs or stock options if you work in a big corporation. Those are times where you really do want to bring in an expert.
Yeah, because my brain doesn't work like that.
You would be so great.
No. Okay, so let's talk about some changes to state and local taxes. Something known as SALT?
Yes. It was contentious during the last tax reform because the SALT, the state and local tax deduction, was capped at $10,000. Essentially what it means is that you could take your taxes that you're paying at the state and local level and take a deduction on the federal level. Again, not getting double taxed, right? So that was capped at $10,000 a couple years ago. That is now increased to $40,000. So it's a huge benefit, especially for the tri-state area where our state and local taxes are higher than other parts of the country. There is a phase out if you're making $500,000 or more, so be sure to look at that. And we were talking about whether you'd want to file it by yourself or hire a CPA. Probably a good time to do that because they can look at both ways to file. Do you just take the standard deduction or is this SALT deduction change going to be beneficial and you itemize? So this is a good year to bring in a professional.
I have an expenses question.
Sure.
People keep their receipts all year long. If you didn't do that, can you use the credit card statement as proof, as a receipt?
Great question.
Yeah, often you can. Yep, that's usually not a problem. But I typically tell people to keep your business on one credit card and then your personal on other, so that it's just very clean and very clear to the IRS if you were to get audited.
Any other changes we need to know about?
There's an extra tax deduction for seniors of $6,000 at 65 years or older, so that's a big one.
It's you.
Yeah. This is great for those in the service industry. Tips up to $25,000 a year aren't taxed anymore.
That's great.
Oh, great.
Yeah, I know. And overtime, if you're filing single, up to $12,500 are not taxed anymore.
So great, because I've been stripping on the weekends, and I really need to keep
Lord
these.
above.
You guys are laughing like it's not true.
Maggie.
Well, I'm going to leave that one there.
No, it's fine.
You're a wise
Gig's
woman.
a gig.
Maggie, thank you so much. Really helpful information
Thanks
for
for
us
having me.
and our viewers.
Thank you.